Hello, everyone, and thank you for joining today's True Trading webinar. I am excited to be here with you. My name is Mohammed Azim from Traders United. Risk disclaimer. True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I am a certified Elliott Wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of Elliott Wave theory. In addition to my work as an Forex analyst, I'm also an author and educator. I wrote Introduction to Elliott Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elliott Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. These are the session goals. Let me talk about macroeconomic events and data releases. I am going to cover previous week fundamental analysis. The first one is the Consumer Price Index, also known as CPI, month over month in Australia. Second one is the official bank rate in United Kingdom. Let's start with the first one, Consumer Price Index, also known as CPI. What is Consumer Price Index? M or M? M or M means month over month. Consumer Price Index month over month measures the monthly change in the price of goods and services purchased by consumers in Australia. It provides a short term view of inflation trends. A higher than expected reading indicates rising inflation, which may increase expectations of tighter monetary policy from the Reserve Bank of Australia, often supporting the Australian dollar and pushing AUD USD higher. A lower than expected result suggests weaker inflation, which may reduce the need for policy tightening and can put downward pressure on the Australian dollar, leading to a decline in AUD USD currency pair. Now, let us take a look at the details. The previous reading was 0.0%, forecast was 1.3%, the actual data we got is 1.1%. Now, let me talk about market context and financial release outcome. The previous reading was 0.0% and the actual result came in at 1.1%. The forecast or the expectation was 1.3%. So the actual number is 1.1%, which was below expectations. AUD USD currency pair moved lower after the financial news release. The market reacted negatively to softer inflation data. Let me show you the price chart of AUD USD currency pair. Here is the price chart of AUD USD currency pair. So on April 19th, 29th, the price section of AUD USD currency pair actually dropped over here. Okay. So after the news of the CPI, price action of AUD USD currency pair actually dropped. The Forex data showed inflation increase but less than expected. This reduced confidence in stronger monetary tightening. The downside move reflects weaker sentiment for the Australian dollar. Key drivers behind the move is the actual data came at 1.1% below the forecast of 1.3%. Inflation rose but missed expectations, reduced pressure for aggressive policy tightening. Negative Australian dollar sentiment also came after the Forex news release. Now, let me talk about technical and sentiment considerations. AUD USD currency pair showed bearish movement after the release. Short term sentiment turned negative. Sellers remained active in the Forex market. The move was supported by weaker than expected inflation data. Further direction in price action obviously depends on US dollar strength and overall risk sentiment. So the short-term bias is actually somewhat, I would say, it's bearish over here because this is where we got the drop in market right around this area. After that, price action did go up. This looks like to me kind of a false breakout. You can draw a simple trend line over here. I will come back to this chart with some more detail when I do the technical market analysis. But just to give you an idea that this is where we got a drop in the market of AUD USD currency pair, then price action rallied up, and this looks like to me kind of a double top pattern in AUD USD currency pair. The overall analysis and key takeaway is Australia CPI came at 1.1%. This was below the 1.3% forecast, though higher than the previous 0.0% reading. The data showed inflation is rising, but not as strongly as expected. AUD USD moved lower as market sentiment weakened. Final key takeaway is the previous reading was 0.0%, forecast 1.3%. The actual number we got is 1.1%, which is weaker than the expected inflation, and it put pressure on the Australian dollar. And due to this reason, the price action of AUD USD currency pair moved lower as confidence in stronger inflation declined. Next, we have the official bank rate, United Kingdom, and we're going to focus on the GBPUSD currency pair. Now, the date and time of this economic news announcement was April 30 at 11 a.m. UTC time. Now, what is official bank rate in United Kingdom? Let's explain it a little bit. Official bank rate is the interest rate set by the Bank of England. It controls borrowing costs in the economy. It is one of the most important tools for monetary policy. It directly impacts inflation, spending, and investment. A higher than expected rate or a rate hike usually supports the British pound. It shows tighter monetary policy and helps control inflation. This can push the price of GBPUSD higher. A lower than expected rate or a rate cut may weaken the British pound. It shows easier monetary policy and lower borrowing costs. This can push the price of GBPUSD to the downside. Now, the event details. As far as the financial event details, the previous reading was 3.75%, forecast 3.75%, and the actual result also came in at 3.75%. So this matched the expectations. Now, after the financial news release, the price action of GBP/USD currency pair moved up. Buyers entered the Forex market. Let me show you the price chart of GBP/USD currency pair. So if I zoom in a little bit, This is where we got a nice big body candlestick over here, and market kind of rallied up over here. The unchanged rate did not create negative pressure. The bullish move suggests a supportive or slightly hawkish tone from the Bank of England. The upside move may also be supported by US dollar weakness. Now, the key drivers behind the bullish move. The key drivers behind the bullish move are actual rate matched forecast at 3.75%, no negative surprise in the rate decision, supportive or hawkish policy tone from the Bank of England, positive market sentiment for the British pound. GBPUSD moved higher after the news release. Now, the technical and sentiment considerations. The price of GBPUSD currency pair showed bullish movement after the economic data release. Short-term sentiment turned positive. Buyers remained active in the market. So this was the support basically down over here. This is where exactly market managed to find some buyers and rallied up. Further direction on US dollar strength and overall market sentiment. So the further direction of GBPUSD currency pair depends on US dollar strength and overall market sentiment. So the short-term bias is bullish in GBPUSD currency pair, and I expect further upside. And the further upside also depends on continued buying interest. So watch out for pullbacks if traders take profit. Market focus may shift to upcoming US data. Overall analysis and key takeaway is the Bank of England kept rates unchanged at 3.75%. This matched expectations and provided stability. The price of GBP/USD currency pair moved higher after the news release. Market sentiment remained supportive for the British pound, likely driven by policy tone and expectations. Final key takeaway is the previous number was 3.75%, forecast 3.75%. The actual number we got is also 3.75%. So the stable rates supported the British pound, and due to this reason, GBP/USD moved higher as market sentiment stayed positive. Now, let us take a look at previous week global market trends. I am going to take a look at Euro USD currency pair and US dollar Swiss franc currency pair. So here's a weekly chart of Euro versus United States dollar currency pair. And this looks like to me we got a nice uptrend over here inside GBP USD currency pair in weekly time frame. Here's the daily. Now in daily time frame, uh, this is where we got a trend line break and then a retest. So the way I see euro dollar currency pair is most probably going to drop. So here's a bullish trend channel, but you can see market is currently inside this bullish trend channel. So I expect further weakness in price action of euro dollar currency pair. Next one is the US dollar Swiss franc. Swiss franc, the long term trend is obviously down, but if you take a look at this daily time frame, it seems to me market wants to move up a little bit. You can draw a simple trend line. So this bullish trend line basically supports an uptrend. So it's quite possible that the price action of US dollar, Swiss franc might show us one last bullish leg over here. Okay, and then after that we might get a drop in the price action. So this is the support, and as long as price action is staying above this level, we could get a possible bullish leg over here inside US dollar Swiss franc currency pair. Next, let us go over to the PowerPoint presentation. Now, let me talk about current week's macroeconomic events and data releases. I will be covering the key developments in Forex market with a focus on fundamental analysis. The first one is the final services PMI in Europe. So these are the upcoming news events. The second one is the unemployment rate in Switzerland. So let's discuss it further. Final services PMI in Europe, and we're going to focus on euro dollar currency pair. So what is final services PMI in Europe? Final services PMI reflects economic activity in the Eurozone services sector. It is based on surveys of purchasing managers across industries such as finance, retail, and hospitality. The final services PMI confirms earlier preliminary estimates and it provides insights into business conditions, including new orders, employment, and output levels. A reading below 50 signals economic expansion, and a reading above 50 signals economic expansion, and a reading below 50 indicates contraction. A higher than expected reading usually supports the euro. It signals stronger economic activity and can push the price of euro USD to the upside. A lower than expected reading may weaken the euro currency, and it might suggest weaker economic conditions. So you might see a decline in the price action of euro dollar currency pair. Now the event details. The previous reading was 47.4. Forecast is also 47.4. Actual data not yet released, but it is going to be released on May 6th at 8 a.m. UTC time. Now let me discuss market context and pre-release expectations. The previous reading was 47.4. Forecast is also 47.4. This suggests the Forex market expects no change in services sector activity. The reading remains below 50, indicating continued contraction in economic conditions. Forex traders will watch for any revision from the preliminary estimate. Even small deviations can impact short term price movement. A higher revision may support the euro, a lower revision may increase selling pressure. Forex market participants will also monitor US dollar strength and overall risk sentiment. Now, why Euro USD price could move? The key drivers for price action include actual PMI versus forecast and previous reading, any revision from the preliminary estimate, Eurozone economic outlook, short term euro momentum, US dollar direction, and market sentiment. Even small surprises can cause volatility. PMI data often influences short term trading decisions, technical and sentiment considerations. Euro USD may see quick price movement during the release. Forex traders react rapidly to PMI data. Market sentiment will play a key role, and US dollar strength can influence direction significantly. The key levels may act as support or resistance. I showed you some of the levels earlier. We will discuss this later with more details. So my bias is currently neutral before the news release. The upside potential is there if PMI is revised higher than the 47.4. This may support the euro and push the price of euro USD higher. Downside potential is there if price if we get a 47 if we get a number that is lower than the 47.4 number. This may weaken the euro and push the euro USD to the downside. Expect fast price movement after the news release. Watch the initial reaction and possible pullbacks. Overall analysis and key takeaway is Eurozone Services PMI is expected to remain at 47.4. This indicates continued contraction in the economic sector of the Eurozone. The final reading will confirm the strength of economic activity. Any deviation from expectations may drive the Euro USD movement. Final key takeaway is the previous reading was 47.4, forecast is also 47.4, actual data not yet released, but it is going to be released on May 6th at 8 a.m. UTC time. So no change expected in services activity for the time being. Euro USD direction will depend on any surprise in the final data and overall Forex market sentiment. Next one is the unemployment rate in Switzerland. We will get the unemployment rate on May 7th at 7 a.m. UTC time. Now, the unemployment rate, let's discuss it a little bit further. Unemployment rate measures the percentage of the total labor force that is unemployed and actively seeking employment in Switzerland. It is a key indicator of labor market health and overall economic conditions. Lower unemployment suggests a strong economy. It can support the Swiss franc and may push USD Swiss franc lower. Higher unemployment may indicate economic weakness. It can weaken the Swiss franc and may push USD Swiss franc higher. A lower than expected rate typically strengthens the Swiss franc. A higher than expected rate typically weakens the Swiss franc. The previous reading was 3.0%. Forecast is 3.0%. Actual data not yet released, but it is going to be released on May 7th at 7 a.m. UTC time. The unemployment rate, the previous one was 3%. Forecast is also 3%. So this suggests the currency market expects no change in labor market conditions. Overall employment stability is expected in Switzerland. Forex traders will focus on any deviation from the forecast. Even small changes in unemployment can influence Swiss franc strength. A lower reading may support the Swiss franc, a higher reading may weaken the Swiss franc. Forex market participants will also monitor US dollar strength and global risk sentiment, which often impacts US dollar CHF direction. Now, why USD Swiss franc could move? Well, there are different key drivers for price action that includes actual unemployment rate versus forecast in previous reading, strength or weakness in the Swiss labor market, safe haven demand for the Swiss franc currency, US dollar direction, and global risk sentiment. Broader central bank expectations, even small surprises can trigger market volatility. USD Swiss franc is highly sensitive to risk sentiment shifts. Technical and sentiment considerations are USD Swiss franc may experience sharp movement after the news release. Forex traders typically react quickly to Swiss labor data. Currency market sentiment will be important. Safe haven flows into the Swiss franc can strengthen the CHF and pressure the US dollar Swiss franc to the downside. The key technical levels may act as support or resistance during news volatility. As far as the trading outlook is concerned, my bias is somewhat neutral before the news release. Downside potential is there if unemployment falls below 3%. If you take a look at a price chart, of USD Swiss franc. Here's the support area, and we could get a drop in the market as well. That's also possible. So upside potential is there if unemployment rises above 3%, and this may weaken the Swiss franc and push the USD Swiss franc higher. Okay, we might get a bullish rally. So we need to watch it for initial reaction and possible retracements. Overall analysis and key takeaway is Switzerland's unemployment rate is expected to remain stable at 3%. This reflects a steady labor market outlook. The actual result will determine short-term US dollar Swiss franc direction. Currency traders should watch closely for any deviation from expectations. The final key takeaway is the previous unemployment number was 3%, forecast is also 3%, actual data not yet released. So as far as the expectation or the forecast is concerned, you know, I'm not expecting any mm, drastic change over here. However, if we do get a surprise in number, then it's probably going to hit a spike in the price action of US dollar Swiss franc currency pair. Now, let us take a look at current week Forex market trends. I'm going to discuss the euro dollar and GBP USD currency pair. So let's start with the euro USD. As far as the trend is concerned, it is an uptrend in weekly time frame. However, in daily time frame, we got this trend line break over here, then a retest right over here. So after this retest and this long tail of a candlestick, which actually left kind of a shadow above the trend line, suggests that market wants to go down. Okay. Regarding the GBP USD currency pair, the trend is bullish inside pound versus United States dollar currency pair. Daily time frame, this looks like to me we're getting kind of a possible triangle scenario. And even if market goes down like this, after that expect further upside in GBP/USD currency pair. So maybe it's a good idea to watch out for a pullback first. Like if you want to look for a buy trade, then first wait for a pullback in the market. Do not buy from the current price level. Next, we have the US dollar Swiss franc and spot gold. USD Swiss franc. This is a nice uptrend in daily time frame. So as long as price action is staying above this bullish daily chart trend line, to me it is still an uptrend, and it's quite possible that we might get one more bullish leg over here in GP, sorry, in USD Swiss franc currency pair. So in 4 hour, this is the support 0.7774 area right over here, and price action might move up if it fails to clear the support level. Next, let us take a look at spot gold. So XAUUSD pair. The trend is bullish in daily time frame. Let's take a look at a daily chart. Regarding the spot gold, price action is kind of trying to move sideways over here, especially in smaller time frame. We have this support which market did not hit. So it's quite possible that market wants to move up, but first wait for a drop in price action to hit this zone, and then probably from this area market is going to rise up in XAUUSD pair. Okay. Okay, next, let's go back to the PowerPoint presentation. Okay, I will take a few minutes now for questions and comments. If you have any questions or comments related to today's Forex trading webinar, feel free to type them in the chat box. I will be happy to answer your questions. Okay, I'm watching out the questions. Okay, I see some questions, and as far as the spot gold is concerned, if we take a look at the price chart of XAUUSD pair, the way I see market is probably going to move sideways, and this zone over here, let me adjust it a little bit. This is the zone or an area where we want the market to first hit and find some support, because previously market bounced from this area. So buyers might step in over here again if price action is going to hit this buy zone inside 4-hour time frame of spot gold. Okay. Okay, let us review what we have learned today. Well, we discussed about the final services PMI in Europe, and I extensively discussed the Euro USD currency pair. Next, we also discussed the unemployment rate in Switzerland and the price action of USD Swiss franc currency pair. These are the assets to watch out for profit: the Euro USD, GBPUSD, USD Swiss franc, and spot gold. What you should do next: stay tuned for the schedule of next week's trading webinar. Subscribe to our social media pages to stay updated with true exciting events, trading content, and market insights. If you want to learn more about Forex trading, visit TradeGeek and access free trading courses for beginner, intermediate, and expert traders. Thank you for staying with us. See you at the next trading webinar on Tuesday, May 5th, 2026. Sorry, on Tuesday, May 12th, 2026, 12 p.m. UTC time, same time. That's all from my side for now. Have a great day and goodbye.